Hey, what's up? My name's Samuel Leeds. I'm a property investor. I've been in buy-to-let property now for over 10 years, and I've trained tens of thousands of people to do the same. And in this video, I want to tell you the basics of buy-to-let property investing. Now listen, you might be thinking, I don't want to know the basics, I want to know the advanced stuff. But these basics that I'm about to teach you, the 5 basic foundation fundamental principles of buy-to-let property investing, are things that 90% of property investors don't do. So although they're basic to me and they're basic to my students, they're absolutely fundamentally important. So if you're considering buying a property and renting it out, then you must watch this video till the end. Also, if you like my videos, if you like the channel, please don't forget to smash the like button. It helps the YouTube algorithm. Also, if you're not subscribed already to the channel, subscribe, turn on the notification bell so you never miss a future video. So the top thing, number 1, is if you're buying a property, you want to buy it in an area that's trending, that's going to give you expected capital appreciation. Now, this is what I mean by this. Most people, what they do is they wait for properties to go up in value, and then they go, oh, look, that area's going up. Oh, wow, it's gone up by 50% in the last 2 years. Let's buy there. And then what happens is, of course, it drops. And then they go, it dropped. Oh my goodness, I've lost money. And then they sell. That is not what you should do. What you should do is the opposite. Because what you need to do is you need to realize that after an expansion comes a recession, and after a recession comes an expansion. So you want to find areas where properties have actually gone down quite a lot, or are even going down. And it's the opposite of what your intuition might tell you, but as an investor, this is all about following trends and doing what's going to make you money. So when a property is going down, you want to go, great. And then as it bottoms out and it's not gone up yet, you buy low. Buy it low and rent it high. So that's tip number 1. And again, I'm not suggesting that you buy properties that are in dive, dump hole areas, which is why we're going to get on to some of the other points. I'm not saying just buy really cheap properties. The return on investment needs to work out too. But what I am saying is don't get carried away when a market's going up and think, oh, it's going to go up and up and up forever. It won't. If it's gone up a lot in the last 5 years, it's probably going to drop and it's going to correct itself. If it's gone down and it's bottomed out, it's probably going to go up. So that's the first thing for expected capital appreciation. However, point 2, capital appreciation doesn't pay the bills. Point 2 is you need to make sure that the property is giving you a high return on investment. Capital appreciation, in other words, properties that go up in value, that doesn't pay the bills. It might make you rich, it's fantastic, but you can't bank on capital appreciation. What you can bank on, and you can physically bank every single month, is cash flow. Cash is not king, cash flow is king. So what you want to do is you want to make sure that your property that you're buying is giving you money each and every single month. It is not an asset if it's not putting money in your back pocket every single month. And I hear people saying, oh, I want to buy a property for capital appreciation as long as it washes its face. Washes its face. You know what that means? That means it doesn't have to make any money. It just needs to pay for itself. That's a terrible investment. The point of property is that it makes you financially free. It doesn't have to wash its face. It has to pay you every single month. So you need to work out how much rent is that property going to generate, and how much money are you going to put down in the first place. You're going to work out the return on investment. Now, most people work on yield. I don't care about yield. Yield is what's the annual rent and what's the purchase price, and you divide the two together. I think that's completely irrelevant. So point 2, still on point 2 here, is you need to work out what's the return on investment. And the return on investment is the amount of money that you personally had to put down. So that's the deposit, that's the legal fees, whatever you personally had to put down. And then you need to calculate how much monthly profit are you going to be getting. What's the monthly rent minus management, minus maintenance and voids, minus the mortgage payments, the 3 M's, management, mortgage, maintenance. What's the rent minus those 3 things? That's going to give you with your gross profit, your pre-tax profit. Times that by 12, that's your annual profit. Divide that by the total amount you put down, and that is a return on investment. And that figure, you should be aiming to get 20% or higher. Very, very important. Point number 3, you want to always buy below market value. The great thing about property is that you can buy below market value. There's lots of stuff, there's lots of investments like gold and Bitcoin, and where the price is the price is the price. Now with property, the great thing is that's not the case. The price is what someone's prepared to pay for it, and the price is what someone's prepared to sell it for. So in property, you want to find motivated sellers, you want to find people that have to sell quickly, and then you want to get the best possible price. You want to get bargains. So find properties that are already bottomed out, so the market value is low, that are going to cash flow high, and then buy them even lower. Negotiate the price down. And the way you do that is you do that by asking the question. Ask the question. Before you even view a property, don't go and view 20 properties and just put in a cheeky offer. Before you even view, ask the question. What's the seller's situation? You know, look, I'm an investor, so I don't want to offend anybody, but I'm only likely to be able to offer around about 80% of the market value. Is it worth me booking a viewing or not? How long does that take to say that to one estate agent? Like 20 seconds? What would happen if you phoned 20 estate agents a day? That's like a few minutes potentially actually of phone time on the estate agent. If you did that every day, you're gonna find some estate agents say, you know what? You've hit the jackpot because this particular seller is really motivated, he's moving to Australia or he's got to sell, so I think he might accept your offer, come and view it quick. And then you've got bang, below market value. You're only phoning for properties that are in high expected capital appreciation areas that are going to give you high cash flow. So that's the first 3 points. If you're enjoying this video, please do smash the like button, drop a comment below, subscribe to the channel, smash that like helps the algorithm, and then more people can see this message and be smart when it comes to investments. Number 4, this is so important if you're starting out buy-to-let property investing, and that's this. Buy with your formulas, not with your feelings. You're going to struggle to tick every single box, high return on investment, high expected capital appreciation, all these boxes, these formulas, and also like the property. If you're thinking about liking the property, I like the property, it's got a good feel to it. I like the garden, and it's about your feelings and what you like. I can see myself living here one day. If it all fails and all goes to, everything hits the fan, you know what? I'll move into my investment property because I like it. That's a bad plan. You want to buy strictly, not with your feelings, but with your formulas. You want to buy properties that are going to give you money, and then guess what? It's not going to hit the fan, and you won't need to move into it. The purpose of an investment property, and as an investor, is you want to buy things that are going to make you as much money as possible. So do not buy with your feelings. Do not get emotionally attached to a property. Never be at ease until you get the keys. Don't start thinking, before completion, oh, I love this property, and have a little dream board of it and dream about it. Because then what will happen is the seller will say, oh, you know what? I've changed my mind. You're going to have to give me more money. And suddenly you'll be in a situation whereby you'll be emotionally attached, and you'll start making, when emotions are high, intelligence is low. So do not get emotionally attached. Point number 5, lastly, is this. You need a good power team. And what I mean by a power team is you need a good solicitor, a good accountant, a good mortgage broker to get you the best rates. You need a good estate agent to sell you the deal in the first place. And you need a good letting agent that's going to manage the property and make sure that this is a passive income as opposed to a headache. You can have 100 houses, and unless you've got it systemized properly, it's just going to be 100 headaches. So work on relationships. I always say a good relationship is actually better than a good deal. So my advice to you, if you're thinking about getting into buy-to-let, is find other property investors that are doing buy-to-let. Network, go to networking events, go to training seminars and meet people, meet estate agents, ask around, get referrals, and build your power team. This is a business. This is not a hobby where you just happen to own a second home. If you do that, you're going to get a hobby-like income. If you treat this serious as a business and build your power team and equip yourself and educate yourself, and you follow these 5 points, then you're going to get, because you're treating this serious as a business, you're going to get serious business results. So that's my 5 tips. I hope you like it. If you want to see more videos like this, please do let me know in the comments. Smash the like, subscribe to the channel. If you want to see more videos a bit like this, into a bit more detail, you can see a whole playlist that I created just for you. The whole playlist is right here, and you can subscribe right here. Do that, subscribe, share the video around. Thank you so much for watching. I'll see you next time.